Hi everyone, myself Pavitra. I worked as a lecturer for some time and now I'm working in a company. So this is about myself. Okay, today we are going to discuss about accounting terms. Before I start this topic, I would request you to watch my first video where I have explained the meaning and accounting concepts. So if you haven't watched it, please watch the first video. I'll be giving the link in the description. Okay, and then come back to this topic. Okay, so now so today we are going to learn about accounting terms. Accounting terms are the different words we use in accountancy. There are many accounting terms. So today in this video I am going to start with assets. So what is asset? Asset is the property of the company, or assets are the valuable things of the company. For example, if you ask me what is my asset, I would say I have a own house, I have a TV, I have a refrigerator, I have a cash balance, I have some balance in my bank account. So these are my assets. Same way, company also has assets. Okay, what are company's assets? If you imagine about a company, what is the first things comes to your mind? A big building. Okay, so building is a asset of the company. Next, if there is a building, there must be a land. So land is also a valuable thing, asset of the company. And if the company is producing something, then they obviously use machines. So machinery or machine is one of the asset of the company. And if company has cash balance, cash is an asset of the company. Then inventory or stock. For example, if company is producing chocolates, so those chocolates are inventory of the company. I mean, the chocolates are ready for sale, but it is not sold yet, and those chocolates are still in the godown of the company. So those are called inventory. Okay, then what else we can see in a company? Company must have chairs, tables and all. So furniture. Then in company we can see laptops or computers. So those are also assets of the company. Computers or laptops. So these are the few assets of the company, properties of the company. So now we'll see types of assets. The assets are divided into two categories: intangible asset and tangible asset. Tangible and intangible. What is tangible asset? Tangible assets are the properties of the company which has physical existence. That means assets or properties of the company which we can see and touch it. For example, building, land, machinery. So these are tangible assets because these assets can be touched or it can be seen. Building, we can see it. We can touch the building. Land, we can see the land. We can touch the land. So these are tangible assets. And what is intangible asset? Intangible assets are the properties of the company which we cannot see and which we cannot touch it. They are goodwill. What is goodwill? Goodwill is a good name or brand name of the company. If company has a very good name in the society, then it becomes asset for that company. For example, there is a X company and it has a very good name in the society. So how it helps to the company? X company with its good name, it can easily sell its products in the market. So this is how it benefits to the company. So goodwill is considered as an asset of the company and it comes under intangible asset because goodwill is a good name which we cannot see it. It is invisible. We cannot see it, we cannot touch it, we cannot feel it. Next is patent, copyright, trademark. What is patent? Patent is a legal right given by the government to the companies to protect or to safeguard their new invention. For example, a company has invented a new product. So in this case, company can take patent right from the government to protect its new product. So usually the patent and copyright is given for some period of time. So during that time, other company cannot copy this company's new product or new invention. Okay. The next is copyright. The copyright is also legal right. It is given for some period of time and it is given for the authors to protect their books, and it is also given for the movies, musics, artwork, okay, to mainly to protect from copying. And next one is trademark. And trademark is mainly for to protect company's logo, symbol, tagline. Okay, for example, you would have seen McDonald's symbol like this, logo something like this, yum. And if you clearly observe, you would see R. R is registered on the right hand side. Okay, so this company has registered its logo and tagline. McDonald's tagline is I'm loving it. Okay, this company has registered its tagline and logo. So other companies cannot keep McD's logo and tagline. Okay. If I give you another example of iPhone, you can see something like this. Okay, even the iPhone, Apple phone has registered their logo. So other company cannot keep this logo for their product. If company has not registered their logo, what will happen? X company may come in the market and they will keep this logo for their mobile. So if X company comes and keep this logo for their product, what will happen to the Apple company? Their sales comes down because they have both the companies have same logo. So the sales comes down because the demand will go to both companies because both the companies have same logo. Okay, I think it's clear now. So these are assets, tangible and intangible assets. Now this tangible assets are again classified into two categories. They are non-current and current assets. Okay, non-current assets are also known as or also called as long-term assets. Okay, the meaning is long-term assets cannot be converted into cash easily within a one accounting period. And current assets are those assets of the company which can easily converted into cash. Examples are building, land, machinery. These are non-current assets because these cannot be converted easily into cash. And what is current assets? What are the examples? So cash is a current assets. Bank balance. Inventory is also current assets because the inventory or stock of the company can be easily converted into cash by selling. Okay, within one accounting period it can be converted into. So now I am going to take new accounting term, inventory. Okay, we just learned that inventory comes under current assets. That means it can be easily converted into cash within a year. So what is inventory? We'll understand this inventory in detail. So this inventory is divided into three categories. We have three types of inventory: raw materials, work in progress, that is WIP, and finished goods. Okay, we'll understand each of this meaning with an example. Okay, I'm going to take a chocolate company as an example. A chocolate company which produces bar chocolates and the smaller ones. Okay, to produce chocolate, what are the basic ingredients, the basic items a company needs? Cocoa powder or cocoa beans, and what else? Milk powder, sugar, etc. There will be many. So these are the basic ingredients a company wants to produce chocolate. So the basic ingredients are called raw materials. Okay. Then what is WIP? WIP is work in progress. That means semi-finished. So company has taken all these raw materials and company started producing chocolate with the use of different machines. So company has started producing these chocolates, but the production is not completed. The final output of chocolate hasn't done it. So that is called semi-finished or WIP. Okay, it is in the middle stage, it is not completed yet. Then what is finished goods? Once a company has used these raw materials and they produced these chocolates with different machines and the product is ready, the final output of chocolate, all wrapping, packaging, everything is done, the product is ready for sale, those are called finished goods. The final product which is ready for sale but it is not sold yet. Okay, that is called finished goods. Okay, I think it is clear for you guys. Okay, so the next word which I am going to take is a very simple one. We use this word in our daily life. Purchase. Okay, I'll explain you with example. For example, we purchased 6 laptops from X company. Okay, this becomes purchases. Okay, here X is a supplier or seller or vendor. X, here in this example, X is called supplier or vendor or seller, and V becomes purchasers. Okay, we purchased 6 laptops from X company. Okay, the next word is purchase returns. Okay, purchase returns. We'll understand with the same example. Here we purchased 6 laptops from X company, and after purchasing, we came to know that one of the laptop is not working. It's defective one. So what we are going to do? We are going to return or send this laptop back to X. So purchase returns means sending back the item to X, to the supplier. Okay, it's very simple one. I think you have understood. Okay, the next one is sales. Okay, what is sales? We'll understand with the example. We sold some 10 box of chocolates to Mr. A. We sold 10 box of chocolates to Mr. A. Here in this example, A is a buyer. He bought chocolates from us, buyer or purchaser. And we are sellers. We sold chocolates to A. Okay, I hope it is clear for you. Next term is sales returns. Okay, so here we sold 10 box of chocolates, and after buying, A came to know that 2 boxes of chocolate were spoiled. So what he is going to do? He is going to return this 2 box to us. So this becomes sales returns. We sold 10 box of chocolates to A, but A found 2 of the boxes were spoiled. So he's not going to keep that with him. He's going to return that 2 box. He's going to send that 2 box of chocolate to us. This becomes sales returns. So in today's video, we learnt assets, the different types of assets, and we learnt inventory, different types of inventory, then purchase returns, sales returns. Okay, so I want you to pause the video for some time and just recall all the things what we have learnt. Okay, now for the next video I am going to take some new terms, and okay, I'll upload the video.